Would you like to win and achieve success at what you do? Welcome to the Winner's Ways podcast, where we create winners every day. And now, your host, the author of Winner's Ways book and life coach, Bola Alabi.
Hi everyone, welcome to Winner's Ways Academy, where we teach you how to manage your finances, enhance your career, and prosper in life. This is episode 10, and today we'll be talking about assets and liability, and of course, I want you to know the difference. So basically, today's episode is on personal finance. Assets and liabilities are the two terms that you need to know when we talk about money management. And having the knowledge of the difference between the two can help you properly plan how and where your money should go. So what is assets? In a layman term, asset can be defined as something that puts money into your pocket. Basically, something that where you receive income, revenue at the end of a particular period. So let's say monthly, you have money deposited in your account because of assets. So asset can be a piece of machinery that you lease out and get payment on a regular basis. It can be a property that you rent out and collect monthly rents, or your ownership stake in a company through acquisition of shares that pays quarterly dividend, or royalty from your work. For example, if you have a music, or you made a movie, or of course, if you sign a book deal, you get royalty from this investment vehicle. Examples of assets include land, building, equipment, and machinery. So to summarize, you make money on your assets. Or asset is something that you own. Liability, on the other hand, is not your friend. Liability can be defined as something that takes money from your pockets. Basically, liability costs you money. For example, if you buy a car on a loan and you pay monthly interest on the loan, then your vehicle should be considered a liability because it takes money away from your pockets. If you like to accumulate material things, clothes, shoes, piece of jewelry, and so on, you are investing on liabilities because you do not earn anything from these items. Liability also include credit card debts, mortgage loan, and every other thing that costs you monthly payment to keep up. So to summarize, liability is something that you owe. One significant difference between assets and liability is that assets provide current or future economic benefit to you, while liabilities provide past and future obligations that you must fulfill. To tell you how important these two terms are, businesses all over the world, according to regulation, they always include information about the assets and liabilities and their balance sheet when filing their financial statements. Successful and thriving firms often have high proportion of assets to liabilities. One common myth that I would like to debunk here is that what many people say is that my home is an asset. That will not be totally true, even if you have paid off the home, because you'll be paying insurance, taxes, and HOA on the home. from time to time, or maybe every year. So it still costs you money to maintain that home. So broadly speaking, asset can be categorized into four main categories. There are tangible assets, which can be seen or touched, and these include plants, equipment, or property. There are intangible assets, which are non-physical. That means you cannot touch them, and they include brand names or domain names or software. These assets are believed to bring in more value than tangible assets, which are subject to depreciation. So, brand name is an intangible asset. For example, Coca-Cola has a high value based on the brand alone. There are also current assets, which are items a company owns and consume or are converted to cash within a year. And these include cash, bank balance, inventory, accounts receivables, and prepaid expenses. And the last one on the list is fixed items, fixed assets rather, which are that which a business owns, which will be used by the company for a minimum of a year without conversion into cash. And this may include buildings, fixtures, furniture, computer systems, copyright, patent rights, etc. Liabilities can also be categorized broadly into two. There are current liabilities, number one, which are debts that are payable within 1 year. They are short-term loans and bank overdraft. And number two, long-term liabilities, which are debts that are payable over a more extended period. For example, a mortgage, which are payable over 30 years, is a long-term liability. To be financially fit and stable, you need to understand the difference between assets and liabilities. If you want to be financially fit, invest more on assets. Make sure you are buying assets that will produce income. When you invest regularly on income producing assets, after many years of persistent focus, you'll be able to start generating passive income that will help you to retire rich eventually. But when you put your money too much on liabilities, it only costs you and it hurts your pocket. Like I said initially, assets is your friend, liability is your enemy. To win with your money, you must understand the difference between assets and liabilities. I hope today's program has benefited you and you'll go out and find assets that you can invest on. Our quote of today: you are your greatest assets. Put your time, effort, and money into training, grooming, and encouraging your greatest assets. Hopkins. Question of the day: let me know examples of assets or liabilities that you have. I want to know your most prized assets and the liability that is giving you sleepless nights. Use the hashtag asset I'm proud of or liability to get rid of in the comment section. At Winners Ways, we are on a mission to create more winners. We want you to succeed in your career and personal finance. Please subscribe to our podcast and also leave us a review on iTunes so that we can attract more people. Thank you for listening. Till next week again. This is episode 10. Assets or liability, know the difference. I'm your host, Bola Halabi. Till next time. Thank you for listening. Bye.